be. It's certainly different, but different isn't always significantly better. And finally, we're looking at cross-pollination of these technologies. So I think one of the things that makes us unique as a center is we're really examining technologies not in isolation, but how they operate with each other. So how do we think about data policy, GDPR, digital trade, cross-border data flows, healthcare data, medicine, AI, blockchain? How do all of these technologies interoperate? And what are broad policies, whether regulation or whether business practices and protocol, or even technology protocol layer decisions that can actually ensure that, again, we can really envision the transformation that these technologies of the fourth industrial revolution promise and better society as a result. So we welcome your engagement with the center and with any of these projects that we have running at the center.
Great. Well, thank you so much for joining us today. That's a wrap for our session.
All right, so I spent the first part of my presentation discussing Bitcoin and doing an introductory conversation about Bitcoin. And you may have heard this term blockchain. In fact, it's on the poster. It's on all the posters. Blockchain and cryptocurrency. What on earth is a blockchain? And what does it have to do with Bitcoin? So, Bitcoin is the foundational technology. Bitcoin is the technology that started it all. Bitcoin is the parent. And it has spawned many children. Because it is successful. And as a successful technology, it has created a number of other opportunities. When people use the term blockchain, they're referring to one technology that is part of Bitcoin. It is perhaps the most visible technology, which is the database that stores transactions, the public ledger, the list of all transactions that has happened. It's a decentralized, replicated database, for those of you who are interested in the technical terms. That is what a blockchain is. But people don't use it to mean that. People use the term blockchain to mean things that are kind of like Bitcoin, things that do what Bitcoin does and then some, and all of the other applications that have nothing to do with money. And then the banks go, and some of the things we do, but we would like to call blockchain to seem like we're doing innovation. And then the consultants go to the banks and say, and you can also call blockchain doing exactly what you used to do business as usual without being disrupted at all, and we're sure we can make it work for you if you pay us enough. As a result, nobody really knows what blockchain means. Blockchain is an industry. We have a saying that the most important meaning of blockchain is that if you go to Silicon Valley, go into your hotel room, turn off all the lights, stand in front of the mirror and say, blockchain, 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 3 times, 10 venture capitalists will jump out of the closets and throw millions of dollars at you. And that is true. That is true. I've seen it. Blockchain in itself is meaningless. Blockchain is what we use to say the technology behind Bitcoin, which is a bit like saying network is the technology behind the internet. And of course, if you're one of the industries that is being massively disrupted by the internet, maybe you want to say, hey, we can do network too. We don't want to do the public, messy, open, not very profitable, freedom-bringing internet, but we can do network all day. As long as it's private, controlled, and profit-making, and we can charge by the minute, we can do network too. And if you think that's fiction, that's exactly what happened on the internet in the 90s. That's what the phone companies tried to do. They tried to create private internet, which was internet without any of the interesting things. It was internet where you needed a license and a registration and an account. Well, now, a lot of companies are trying to do that with the Bitcoin space. So, blockchain means some interesting things, but it also means some not so interesting things, and it also means some things that are just attempts by consultants to confuse enough to make some money on the side. I'm going to focus on the interesting things. So how do you tell what a blockchain is and what a blockchain isn't? What are the things that are interesting about Bitcoin? What are the things that are interesting about the internet? Is the internet interesting because it offers you network? Is Bitcoin interesting because it does payments? To me, the interesting things are certain characteristics. What is Bitcoin? Bitcoin is a system of payments that is open. What does open mean? Open means anyone can access it, anyone can participate, anyone can innovate on this system without asking for permission. That's what open means. It is borderless. There are no borders. There are no borders on the internet. There are no borders in Bitcoin. The protocol simply does not see distinctions between countries. They are meaningless. It is neutral. It doesn't care if the participant is male, female, Christian, Muslim, old, young, rich, poor, brown, black, white, or whatever. The protocol doesn't care. It's neutral. It validates transactions. It's decentralized. There is no central point of control. It is censorship resistant. You cannot censor, freeze, or cancel transactions. Those are the things that make Bitcoin interesting. Arguably, those are the things that make the internet interesting, right? That's why it's powerful. There are other blockchains that also share those characteristics. In fact, people have taken the basic recipe of Bitcoin, and in the first year they created 2 or 3 alternative coins. They were called altcoins. Since then, every year more and more and more and more. Today there are more than 1,500 blockchain-based systems that use the basic recipe of Bitcoin or variations of that design principle to create systems of currency, systems of trade, platforms, and various other things. These are all blockchains. Most of them share the interesting characteristics of Bitcoin. They're open, borderless, neutral, censorship resistant. Some do not. Of the 1,500, I would say more than 90% are worthless. And of those, more than 90% are probably scams. Their primary purpose is to enrich the people who created them. They see something successful, they try to create it. In fact, we have seen the emergence of a very large number of scams. Scams that are, in essence, Ponzi schemes. Who's familiar with the term Ponzi? Ponzi? Did you know that's the name of a guy? Mr. Ponzi. He inadvertently became famous. Multi-layer marketing systems. Pyramid schemes, right? So if you try to sell Bitcoin to someone, and I don't, I talk about it as an experimental technology that you should only invest in if you really understand how it works, and you should primarily invest in learning and understanding the technical skills that can turn this into an innovative industry, a startup business, a career, some opportunity for you as an individual. It's not a stock investment. And if you hear someone tell you that this system is an investment. It's a sure investment. It's a safe investment. It's a risk-free investment. Or even worse, it is a system that is guaranteed to make you rich quickly, run away as fast as you can. Because those characteristics are shared by only one category of investments: scams. Nothing in life is easy, risk-free, and will make you rich. So, beware, especially in Southeast Asia, where you have very large numbers of new middle-class investors for the first time entering investment markets. Scam coins, Ponzi schemes, and multi-level marketing schemes are extremely popular. When you hear this is like Bitcoin, only it will make you rich, go away, run away. Bitcoin will not make you rich. It can make you poor quickly. It is a volatile experimental system that comes with risks. I am advocating the understanding of this technology, which is enormously powerful, not the use of it as a speculative investment. Unless you need to use it and know how to use it, it's not an investment. Now, let's talk about some of the other systems that are out there. There are probably about a dozen other cryptocurrencies. Cryptocurrencies is another term we use for these open blockchains, these public systems of ledger that can be used to build systems of trust. Some of them are very explicitly currencies. I'll mention just a few. You may have heard of them. Dash, Monero, Ethereum, Zcash, Litecoin. All of these are cryptocurrencies that are based on open public ledgers. They represent interesting technologies that are developing alongside Bitcoin. Many others are also growing. I do not recommend you use those as speculative investments either, but understand what they do and how they're different so that you can get a better picture of this industry as it emerges. My next book is on Ethereum, which I haven't talked about much. How many people here are familiar with Ethereum or have heard of it, used it? Great, a very large number of people. So for those of you who have not heard about Ethereum, Ethereum started based on a paper published in 2013 by then 19-year-old Vitalik Buterin. I got a hold of that paper before it became public and called Vitalik up to get some information about this. I was very skeptical, but I have been interested ever since, and I'm writing my next book on it. The idea behind Ethereum is, if we can have this public ledger that is allowing us to trust and do computation at scale, how about instead of using it for money, we use it to run computer programs? And these computer programs run everywhere, and their results are recorded in a way that is immutable, persistent, and trustworthy by all of the participants. Global, secure, decentralized computation, not money. And it has a system of money called Ether. But what it really allows you to do, interestingly, is run smart contracts. The idea here is taking contractual arrangements, the kinds of things we would do in commercial contract law, or transactional law as it's known, and encode relationships and contractual obligations in software programs. If this happens, then do this, else do that. The way you would write a contract in a human spoken language, instead encoding it in software, and then having that program of law execute on a global platform. Not money, but it is part of this system of trust that is based on the same global blockchain phenomenon. So blockchain isn't just money. People have suggested using blockchain for a number of non-financial applications, mostly applications related to trust. One very common application is the registration of assets or ownership of tangible or non-tangible things. For example, and this is a big problem in developing nations, and an area where blockchain can have a very large impact, is the registration of title over land and the ownership of assets like homes. So the possibility of using a blockchain is because if you record something on the blockchain, it cannot be modified. It is immutable. Once recorded on a blockchain, the system of trust prevents anyone from reversing that, from overwriting that, from changing the past. So it creates a permanent, immutable record of history. In a real estate transaction, that is really important. That allows you to pass title of a piece of land from person to person independently, while no one being able to falsify that record or steal your land through paper. One of the most common forms of theft of land are with the falsification of paper. You don't have to go into someone's land with guns and take it from them if you can go to the local land registry office, bribe someone to change it into your name, and send the police into their land with guns to take it from them on your behalf. That kind of thing can really be affected by a blockchain. Other things are the registration and access to assets. You can, for example, have the title of a car, a boat, an aircraft registered on the blockchain. We were having a discussion here in the waiting room with a gentleman from the airline industry, and one of the interesting applications we discussed is the ability to record maintenance records and parts in a blockchain in a way that they cannot be modified. If a plane crashes, I'm a private pilot, by the way, so this is an area of interest to me, but if a plane crashes, one of the first things you want to do is go back and look at the maintenance records and say, was the left jet engine actually inspected after 100 hours of operation as it's supposed to be? How can you tell? In traditional forms, if we have that written down on paper, I can write down today and put a date a month ago before the plane crashed and say, look, it was inspected. You falsify the record after the fact. You could falsify a database after the fact. And witnesses are unreliable. How do you know what actually happened? A blockchain allows you to record the fact that an inspection happened, and it cannot be modified or falsified after the fact. And it cannot be inserted in the future and pretend to be in the past. So these are elements where the same mechanism that's used to create trust for money and transactions can be used to record the truth in a permanent, immutable record. These are the applications that most companies are fascinated by beyond money that have the general term blockchain. That's the good. Now let's talk about the bad and the ugly. That same term blockchain is used to mention a lot of things that do not have any basis in fact and don't actually work. What has become very fashionable lately is this idea that you can do blockchain without Bitcoin. As in, blockchain is good, but Bitcoin is bad. It's used by criminals, gamblers, degenerates. It's just money. One of the fundamental mechanisms behind the blockchain is its security. Bitcoin allows you to have a system that is decentralized without a central point of control by creating a competition in which those who provide security are rewarded in Bitcoin, the currency. So the currency in Bitcoin is not just a vehicle for doing value transactions, it is the basis of the mechanism of security. And that mechanism of security allows you to have a blockchain that is operated and secured by anonymous participants whose only claim to providing security is that they submit as a promise for their security, and they risk energy, and they may gain as a return a reward in Bitcoin unless they try to cheat, in which case they lose everything. That competition, that game, is the basis of Bitcoin's security. But what that system of security allows you to do is have the system managed by everyone, so no one is in charge. Here's the problem. If you take away the system of reward, then there is no mechanism for punishment. If you take away the system of punishment for cheating, there is no security. Blockchains use a currency because They use a system of security that is based on market forces, on game theory. To use a blockchain without a currency, you have to find another way of doing security. And this is where the traditional institutions come in and say, I know, how about we assign 5 trusted institutions and they validate every block on the blockchain and make it a private blockchain where we control who has access. And since those 5 private institutions assign trust on the blockchain, if you trust those institutions, you can trust the blockchain. That is business as usual. That is blockchain being used to perpetuate the system of institutional trust that has failed to scale. Only worse. If you use a blockchain in that kind of way, as a private closed system where trust is assigned to institutions, if those institutions are compromised, or their keys are stolen or hacked, because you've concentrated all of that power in just a few participants, that system is no longer secure. These are the same companies that get hacked every time we read on the news that someone got hacked. This is who we're supposed to trust to run these blockchains. The whole point of Bitcoin's open public blockchain is that through a system of currency, it creates security that does not depend on any one individual or institution. If you take the currency away, the security model disappears too, and you're back to a ledger that is controlled by a single entity or a few entities. We have a name for that. It's called a database. So this is the real question you should ask. How do you evaluate the difference between blockchain and, as we would say in America, bullshit? They both start with a B. One of them's real. The other one isn't. One of them is used as the basis of a $12 billion global, secure, decentralized economy. And the other thing is the thing the consultant's trying to sell. How can you tell the difference between real and not real? Ask the following questions. Is it open? Is it public? Is it borderless? Is it censorship resistant? Is it neutral? Can anyone access it without permission? Can anyone use it without permission? Can anyone innovate on it without permission? If the answer to all of those questions is yes, then it's giving you the values that we find so interesting in Bitcoin's blockchain. And you can say that for a number of other cryptocurrencies and blockchains, yes to all of those things. If you can take the entire brochure that describes this thing and do search and replace, and for every mention of blockchain, you can replace it with the word database, and then you read it and it still makes sense, you're not being sold a blockchain. You're being sold a database by a scam artist. And that's the difference between blockchain and bullshit. Thank you. What is Bitcoin, and why are we here today? I'd like to start with the Genesis story and take you back to when this started. In October of 2008, a paper was published called Bitcoin, and that paper explained how the system works. And it was published under a name of Satoshi Nakamoto. And we now know that this is not a real name. We don't know who Satoshi Nakamoto is, or they are. So somebody out there on the internet came up with an idea of how to build a digital currency, and they published the paper in October of 2008. Now, they had also written a prototype software program that ran the Bitcoin software, which they launched on January 3rd, 2009, so just a few months later. And that was the beginning of the Bitcoin system. It was the beginning of the Bitcoin network. It was the beginning of the Bitcoin currency. It was also the introduction to the world of this new concept, which has now become a word that gets said on TV every single day on the financial news channels, which is blockchain, which is one of the technologies behind the Bitcoin technology. So this sounds like a weird story, right? Some person, we don't know who it is, shows up on the internet, posts a paper, launches some software. Some other people run this software as well, and this thing starts running. Embedded within the very first block that was created on the Bitcoin blockchain, there was a message. And this message was handcrafted into the Bitcoin software, and it was embedded in there for a reason. And the message is the headline from that day from a British newspaper, the Times of London. And it says, January 3rd, 2009, Chancellor of the Exchequer on the verge of second bailout for banks, or something like that. So the headline for that day, the day Bitcoin was launched, was that the British Chancellor of the Exchequer, which is like the head of the Treasury here, right, was going to start a second bailout for the banks. Now, this may have been a coincidence. I don't think it was. I think that message tells us a bit about the motivation behind Bitcoin. And part of the motivation behind Bitcoin was this idea that the financial system that has existed and hasn't really evolved much in the last 20 years isn't serving us. It's serving someone, very well, just not us. And what's ironic is when I say us, I'm looking out at a bunch of people who represent 5% of the human population, the most privileged, who have access to the most advanced banking in the world, who have access to multiple foreign currencies, who have the ability to send and receive money with their bank. How many of you here don't have a bank account because you can't get one? One. Great. The average percentage in the United States is 18%. That means 60 million people don't have bank accounts in this country. Want to take a guess about who those people are? Poor. The poor? That's a great answer. Poverty is one of the main reasons why people don't have access to financial services, but also lack of documentation. A lack of documentation may be because they don't have legal documentation. So, of course, illegal immigrants are one of the big groups that doesn't have banking in this country. But it can also be because they don't have documentation for other reasons. A lot of perfectly legal residents of this country also don't have a driver's license. Or they don't have the necessary literacy or numeracy to open bank accounts. And in this country, 18%, that's the lowest percentage in the world for the unbanked. Every other country has more people who are unbanked, with some countries having more than 80% of the population having no access to banking whatsoever. But at the same time, if you talk to people in this country, you'll already realize that the banking system doesn't serve us either. It doesn't. Right? The same people who are quite happy to sell a variable rate subprime mortgage to you or your parents or your brother or your children, and then walk away from a pile of debt and get bailed out. None of them went to jail. More than 1 million homeowners lost their home in the United States, right? And at the same time, while they were doing the foreclosures, they were using a technique called robo-signing, where they were signing the foreclosure documents on deeds they didn't even own. No one went to jail. They were packaging toxic securities up in a technique called CDOs that they knew were fraudulent, and they were talking amongst themselves and saying, these are fraudulent, so don't buy any, but we'll sell them to the customers. And no one went to jail. So who are they serving? Well, themselves, yes, but also not just themselves. Ironically, a lot of the people who work at banks are part of a middle class who are not being served by the banks themselves either, right? They serve the weapon dealers. They serve the warmongers. They serve the money launderers. They serve the international drug cartels. They serve the multinational corporations, but they don't serve us. And if they don't serve us here in this country, imagine how much worse it is everywhere else. If you can't imagine, I can tell you, much worse. Much, much worse. So here we are, after 25 years of the internet. The world is more connected than it's ever been. The ability to communicate information instantaneously anywhere in the world exists for a very large part of the human population. More people have access to the internet than have access to clean drinking water. More people have access to cell phones than have access to clean water. And yet, in the last 20 years, banking hasn't gotten better. It hasn't gotten more inclusive. If anything, we're backtracking. Because over the past 15 years, international finance has become a weaponized tool of geopolitics. It's been used by powerful countries to attack powerful countries in the form of sanctions, currency controls, embargoes, and other forms of economic pressure. So banking isn't serving more people, it's serving fewer people. And more countries are finding themselves in situations where, for no fault of the citizens of that country, they're under embargo or facing currency controls. And they can't transact with people in other countries. And they face calamitous economic conditions where they watch their life savings disappear overnight. And this happened to my family in Greece in the 80s, twice. And it's happened again and again throughout South America, throughout Africa, again and again and again. It's currently happening in Venezuela. It's on the cusp of happening in Turkey. It's happening in Greece again. It's beginning to be a problematic situation in Argentina, in Brazil, and a bunch of other countries. So the economic system that we have is not serving people. And the internet hasn't brought us a financial system that connects everyone together. And part of the reason for that is because modern banking has become a deputized system of law enforcement domestically and a militarized system of control internationally. Our banking is part of the domestic police system, and it is part of the international military system, just like the banking in every other country. It doesn't serve commerce. It serves politics. So back in the early days of Bitcoin, something interesting happened. It was an organization called WikiLeaks that was publishing secrets that the US State Department didn't want published. Secrets about war crimes committed by US forces. And as a result, they wanted to shut down WikiLeaks. And one of the ways they were trying to shut down WikiLeaks is by prohibiting people from sending money to support that organization, right? So, of course, the US government first appealed to the court system to get the necessary convictions in order to stop WikiLeaks from breaking the law. Of course they didn't. WikiLeaks wasn't breaking the law, and therefore they couldn't take them to court. They didn't have the basis in law to take them to court. Instead, what they did was they pressured Visa, MasterCard, American Express, PayPal, and all the American banks and cut WikiLeaks off without any legal process. Now, at the same time, you could use your Visa card to send money to racist groups in Alabama, to send money to all kinds of atrocious political groups around the world, but not WikiLeaks. As this was happening, Bitcoin was just emerging. And within it, buried in that first block, was that little message. And that little message said to me and to many others, this is why we're doing this. This is why Bitcoin needs to exist. Because 25 years into the internet revolution in this world, we are no closer to having a global connected community in finance than we were 20 years ago. In fact, we are further. And the financial system is not getting better at serving people, it's getting worse at serving people. And with control over money comes corruption. We all know that, right? Power corrupts. Absolute power corrupts absolutely. And there is no more absolute power than power over money. You have freedom of expression? Great. But if I can control where you spend your money, you don't have freedom of expression. You have the freedom to vote, but if I can control who can send money to political parties and which political parties, you don't have the freedom to vote. Watch what's happening in Russia or Turkey. That's straight out of the playbook of Putin, right? Starve them of funds, no opposition. Election with only one candidate, I win. Also, democracy. The bottom line here is this. Bitcoin didn't appear in a vacuum. And for many people, it seems miraculous how Bitcoin emerged suddenly in 2009. And nobody noticed at first. It was just the purview of a few weird geeks in a few weird mailing lists. But after a while, people started noticing, and now it's become this worldwide phenomenon. And you might be skeptical, like, some person we don't know invented something we don't understand, launched it onto the world, and now, my younger cousins think I should invest all of my money into this thing, and my aunt thinks it's a pyramid scheme, and I can't tell who's right. If you think about this as an investment, you may be missing the most important point, which is that what this represents isn't an opportunity to get rich, isn't an opportunity to find a new thing to invest in. It's an opportunity to change the fundamental way that finance, money, and banking works in the 21st century worldwide. And if you don't change it for you, if you don't think you need to change it for you, think for a moment about the billions of people who have no access to banking and no hope of ever getting access to banking. And then think about what happens if all of them are able to run a bank on a $25 Android phone, and what that does to our world. Some bad people are going to be able to do some transactions, and that's okay, because some billions of people, or good people, are going to be able to do some transactions. And that's how it works. And on that simple balance, we can change the world. So my interest in Bitcoin stems from two sides. On the one hand, I'm a geek. I love technology. It's so cool, and I get so excited by it that I can't sleep, and I want to read everything about it, and then I discover something else, and that's even more excited, and then I stay up longer, and I have some more coffee, and I read more, and I just get all excited. Some of you share that with me. You don't have to, it's okay, but some of you I know exactly what I'm talking about. And that's a really cool reason to be interested in this technology. It's the kind of technology you can learn about. It's the kind of technology that can lead to a computer science degree or a specialization in another field of study. It's something that you could learn as an accountant, as someone who works in insurance or finance, and it would be really useful and interesting as part of your career, just like learning how to use databases or build a website or whatever else you might be interested in technology. But on the other hand, I look at this technology and I'm interested in it because of politics. Not the politics of parties, the politics of principles. The politics of growing up as a kid in Greece and seeing what happens when money stops working. And this is an experience I don't wish on anyone. And it's an experience that is alien to Americans, at least in the modern era. And I hope it remains alien, but I'm not that sure it will. The bottom line is that money is this magical technology, and as long as it works, we don't need to know how it works, we don't concern ourselves with it, and we don't need to really worry about it too much. Because if we did, and we actually read about how money works, we'd be horrified. Surely that can't be true. They just make it out of thin air and distribute it to banks. They get to lend out money that didn't exist and then charge us interest and get richer and richer. No, come on, that's a scam. That's a pyramid scheme. The dollar works on a pyramid scheme? Tell me it isn't so. If we understood modern central banking, most of us would be horrified. So it's convenient that as long as it works, we don't really need to pay attention. Well, let me tell you something. In 2008, it broke. And we didn't fix what broke. In 2008, our economy broke, the worldwide economy broke, and central banking broke hard. And it hasn't been fixed. In the meantime, since then, the world has issued almost $100 trillion in debt by some measure, all of which is money borrowed from your future retirement plans, from your future education plans, from your future healthcare plans, from the economy, right? And that money isn't going to be paid back. It's not going to be paid back. And there's a very simple reason for that. Everyone's broke. JP Morgan Chase is bankrupt. Citibank is bankrupt. Bank of America is bankrupt. Goldman Sachs is bankrupt. The United States government is bankrupt. Europe is bankrupt. The euro is bankrupt. Deutsche Bank is bankrupt. Japan is bankrupt. China is bankrupt. They're all bankrupt. They can play around with the books, hide some debt, make some bilateral agreements, shuffle shit around, pretend to bail out Greece, send the money and then backdoor it straight back to Deutsche Bank, find some other patsies, make it appear like nothing's happening. They're all bankrupt. And so at some point, there's going to be a reckoning. We never fixed anything that happened in 2008. What we did was destroy currency in order to preserve the illusion of economy. And that's going to come back and bite us. Now, you don't have to believe me. You don't have to think that this is going to be important in your life, and I really, really do hope it doesn't. But one of the reasons Bitcoin was created, and one of the reasons it's important, is because it is neutral, because it is independent, because no one can control it, because no one can change its issuance, because no one can create it out of thin air. It's ironic that when you see criticism of Bitcoin by mainstream economists, they say things like, it's not backed by anything. And really, the question you should be asking at that point, and the dollar is? Of course, the dollar is backed. But you really don't want to hear that story as to what it's backed by. Because then you have to learn some history about Henry Kissinger and the Saudis and a little deal made in 1971. Some towers fell, some nasty things happened, and we've been at war for 18 years. But anyway, the dollar is backed by something. War. to protect oil. And Bitcoin is backed by an international community of geeks, the same geeks who brought you the internet. So again, at some point, hopefully you never have to make this choice in your life because you can always have the freedom to choose one currency versus another. But at some point, you might be forced to choose between the bankers who brought you the Great Depression and the geeks who brought you the internet. And I hope you make the right choice. But then again, if you hear some of the people in the whole blockchain, cryptocurrency, Bitcoin space talk, you might think that the goal of all of this is to eradicate government money as the first step towards eradicating government altogether and replacing all currencies with Bitcoin. One coin to rule them all. World domination. I'm not of that opinion. In fact, I think the idea of having only one world currency is a bit of a throwback to our current currency system. We've grown up with a system of currency where all currencies are backed by nation states. They represent flags, right? They have wrapped up in the commercial mechanism of value a bit of nationalism and patriotism and a flag-waving person. And in each country, it's a different flag. And, they can all do their little chant. By the way, if you go to other countries, when they wave their flag, they also chant number one. It's a bit like when you ask people, are you a good driver? And they say, yeah, definitely. And then 80% of people say they're above average driver. How does the math on that work? So we have become accustomed to a world in which currencies represent nations, and therefore they're part of this battle. It's like the world is a big chessboard, and currencies are pawns that are fighting on this big geopolitical battle. And the dollar wins if the ruble fails. It's country versus country. And in that environment, it's natural to think that currency as a system is a winner-takes-all system, or a zero-sum game, where the only way that one currency wins is by another currency losing. And that's a world in which you cut off your nose to spite your face, which is a good summary of our current foreign policy, but also a good summary of the foreign policy of the European Union, China, and Russia. We are currently engaged in currency wars, and in those currency wars, we are expected to assume that our currency, which represents our flag, is the one we should be backing. But if you stop and think about that for a second, you suddenly realize that that's not money anymore. That token is no longer representing a commercial transaction. It's not representing value for use in business. It's representing something else. It's representing some kind of nationalistic flag-waving thing that you're trying to beat the other side with. And in that environment, if that's what you know, if that's what you grew up with, then when something like Bitcoin comes along, your natural inclination is to think, oh, this one could win the zero-sum game. This one could dominate all the others. But what if that's not how it plays out? What if instead, all along, money was simply a form of language? What if we understood that money is a way for us to communicate value to each other? And as a language, there can never be one that wins. There will always be variety, because every place has its tradition and its special needs. We have languages like those of the Inuit that have 8 words for snow. They don't need that in the Kalahari Desert. So they're going to have a different language that has 20 words for sand. which they don't need in Alaska. But the bottom line is that languages adapt to the local environment, and they will always keep proliferating, and there isn't one wins. In fact, if you speak 3 languages or 4 languages, you're better off than if you just speak 1. So in fact, having variety is what gives you greater value. What if money works that way? What if, in fact, we're going from a world with 195 currencies to a world with 1,000 currencies, to a world with 10,000 currencies, 100,000 currencies? And you can use as many of them as you want or not, and you can choose at any moment in time. And then when you hear that, you probably think, well, that sounds very fucking confusing. I don't want 1,000 currencies. I can barely keep track of how many euros are in a dollar when I go on vacation to Disneyland in Paris. Well, the good news is that we're not talking about traditional paper money. We're talking about purely electronic money. And all of the world's currencies are going to purely electronic money. At which point, the difficulty of trying to figure out which currency you have, which currency the shop will take, what the exchange rate is, and how to convert them is something that disappears into your smartphone or your iPad or your smartwatch or whatever other device is holding your money. And then the fact that you have 10 currencies really isn't an issue because you don't even know you have 10 different currencies. What if we're going to a world where fully connected, instantaneous commerce is possible by anyone, anywhere, and they don't even need to commit to a specific currency, and no currency wins? Because we all win by having choice. And that's really what it boils down to. Until now, you get to use the currency of the country you were born in, and you don't have a choice. If you're an American, you also have the choice to use other currencies, but in many countries in the world, you don't. Just one. And you still have to use that one to pay for government services and pay your taxes and things like that. And you still have to play the games of geopolitics because your retirement and your education fund and your healthcare and your job and your income and all of your expenses are denominated in the currency that they're using as a weapon. Not that you wanted to be playing in those games, but you get to. What does that look like? It looks like waking up in the morning and deciding to go to the supermarket early because you know that at noon they change the prices every day. And eggs could be 30% more expensive later in the afternoon. That's what it looks like, and I've seen that in Greece, and they're experiencing that in Venezuela and Turkey today. So when you understand that Bitcoin happened in 2009, you might think, well, why? Who needs it? What are we going to do with this? Is it just about beating the dollar and having a new thing that wins everything? It's not. It's about having a choice. And for most of the people in this country, that choice isn't very important. But for the rest of the world, that choice is absolutely critical. Most people live under horrible governments that do not give them the freedom to transact with anybody, but they also don't give them the freedom to escape from whatever crazy war, attrition, trade war, currency war they're playing at the moment. Most people live in countries where it is impossible to distinguish between organized crime and organized banking. Although, to tell you the truth, the customer service from the black market organized criminal who changed my money in Argentina was a hell of a lot better than the Bank of Argentina where I tried to change it earlier. So maybe there is a way to tell the difference between organized crime and organized banking. Both are criminals. Some of them give better customer service. But if you live in a country like that, and suddenly something like Bitcoin comes into the world. Not quite yet, because it's difficult to use, and not many people have the tools and the skills to use it, but one day soon, for many people, and already for some people, you suddenly have a choice. You can say, you know what? You go play your games, Mr. Erdogan. You want to try and play Russia against America in a currency and trade war, fighting over F-35s and S-400s, if you know what I'm talking about? Great. While you take the lira to trash, I'm going to take just a bit of my wealth and move it into Bitcoin, and no one can stop me, because this is an internet currency that doesn't pay attention to borders. And if you live in Venezuela and your government is in a death spiral, you can say, I'm going to take some of my money and I'm going to convert it to Bitcoin, or have someone send me Bitcoin from another country. And I'm going to be able to provide food for my children. And I'm going to be called a terrorist by my own government. And I'm going to break the law. And my children are going to get fed. We know of people who actually bought food on Amazon Prime, had it shipped to Colombia and smuggled into Venezuela using Bitcoin. Food. This technology gives people choice. And we already have more than 1,000 currencies that are trying to find different ways to use that same basic technology to do different things. It's a very exciting technical space which has erupted over the past 10 years and created this enormous diverse environment with a lot of exciting development going on. And at the same time, it's a giant speculative bubble with a lot of greedy people running around in circles, screaming, trying to get rich. And at the same time, it's an enormously powerful international movement for freedom and choice that can change the lives of billions. Thank you. Coming here is a great pleasure and a great honor. This is my first time in Scandinavia. I've traveled to 44 countries so far, but the first visit to Scandinavia, and I'm certainly hoping it won't be my last. But it's also been a bit challenging for me to think about what exactly I would talk about in the context of this conference. Now, the conference is Oslo Blockchain Day. Those of you who know me probably know that I'm interested in the open public blockchains, the ones that are disruptive, the ones that are global and free and censorship resistant, things like Bitcoin, things like Ethereum. I'm interested in those because they provide remedies for some big societal problems. Problems such as corrupt government, problems such as failing democratic institutions, problems such as large populations of unbanked people, corrupt banks and banking practices, difficulties in finance and international finance. Problems, in short, that Norway doesn't have. So that's a bit of a challenge because, if I go to Argentina and I say, it's probably not a good idea to have your government in charge of money. They're like, well, obviously. 35 years ago, they were throwing people out of aircraft for disagreeing with them. Not exactly the kind of government you want to give, power over the banking system, currency controls, hyperinflation. You can't have that conversation with a Norwegian. If I go to a Norwegian and I say, well, I really don't think government should be in charge of money. And the average Norwegian will say, why not? They're doing a very good job. I am very pleased with my government. And it's true, right? This is a bit of a challenge to explain why these technologies matter in one of the few places in the world where mostly works in a very good way. And it's not tyrannical, you know, it's not oppressive, quite the opposite, quite the opposite. In fact, 2 days ago, I was walking around the city, and I noticed a whole load of people wearing turbans. And many of them did not look like Sikhs, but they were wearing turbans anyway. And so I asked, well, what is this? Oh, it's Turban Day today. So on Turban Day, in order to show solidarity with immigrant populations, especially Sikhs, we all wear colorful turbans, and we have a competition for who has the best turban, which then gets displayed. Like, oh my God. So in the United States, we're building a wall to keep out the wave of refugees who are coming from countries that we recently bombed. Kind of the same thing. You know, so it's like, it's a bit of a strange situation trying to explain why you would need such a thing. Norwegians have very effective banking, efficient, convenient. This is one of the most cashless societies in the world. Actually, it's the second. It's the second most cashless country in the world. Do you know who the first cashless country in the world is?
Sweden.
Anyone?
Sweden.
Kenya. Whoa, you didn't expect that one. Kenya. Because of M-Pesa, a system of digital money that's transmitted using SMS. But Norway's number 2. Almost there. You can catch up soon. This is a country in which cash is almost invisible. I haven't used cash at all since I've been here. Credit cards, debit cards, very convenient. You also have mobile payment systems. So you can use this system called VIPS, I believe. And very easily, you can send money to anyone up to about, 5,000 kroners very easily. You can send more to some organizations. You have to pay a fee if you do more than that. But under 5,000, it's basically free and fast, instantaneous almost. Do you use checks in this country? When's the last time you saw a check? Okay. Let's see who's over 50. Anybody seen a check here? No? You've seen checks. Very good. Could you explain a check to a 15-year-old Norwegian? They think you're an alien, right? It would be a bit like trying to explain a fax machine.
Yeah.
So this is the challenge, explaining this technology. Well, the rest of the world isn't like Norway. It simply isn't. In hundreds of countries, more than 100, government is not benevolent and functioning and uncorrupt. Banks are rapacious creditors, not partners in business, right? And control of money by institutions leads to power concentration and corruption. But I'm not going to try and sell you on these technologies on that basis. I'm not trying to sell these technologies. What I'm trying to understand is what is the perspective from which a country like Norway can benefit from a technology such as Bitcoin or Ethereum. What is a blockchain's purpose in this country? And so the real idea here is an issue of functionality to me. If you look at what you can do with VIPS, for example, and you look at what you can do with Bitcoin, for example, it seems like Bitcoin is just a weird, geeky version of VIPS that's difficult to explain. But other than that, it doesn't seem to have any benefit. The fees are higher on Bitcoin too. How many of you here have done at least one transaction using an open cryptocurrency, Bitcoin, Ethereum, or anything else? Pretty much everyone, okay? At least 80%. So why would you use this technology here? I'd like to take a moment to think back about the early days of the internet and give you a comparison of the time, which may give you some insight. In the 1990s, I was trying to introduce a new technology to financial services companies in London. And at the time, I came with this new technology as a young consultant, and I told them, this thing is called the internet, and we have a system called electronic mail, and you can use that to communicate with other financial services companies. And it was very difficult, because they said, but we already have faxes, and we already have telexes. And if you make the comparison, email at the time wasn't working so well. So fax, you could send text, but you could also send a drawing. You could send a diagram. You could send a chart. You could handwrite a note and fax it. You couldn't do any of those things with email. Attachments were not working very well. Capacity wasn't there. If you tried to attach an image, we didn't have scanners and cameras and things like that made it easy. You couldn't really do that. Email didn't have guaranteed delivery for text, but every single institution that I had working with me had telex, and telex had guaranteed delivery with proof that you could take to a court. So they used it for the settlement of securities instruments, because they could prove that a telex had been received. So how do you tell people this is going to be better, right? When at the time, it's not better. But if you look at email then, or the internet, what you see is only a glimpse of what is yet to come. What you see is a protocol that can kind of do what already exists, but not very well. But it's much more flexible. And in the future, it can do a lot more. So if you look at Bitcoin versus VIPs today, it looks like VIPs is a lot easier, right? But Bitcoin is a lot more flexible. Bitcoin is programmable. Bitcoin isn't owned by anyone. And so if you try to think about where that will take us in the future, imagine if the entire world had VIPs. Imagine if you could VIPs money to 7.5 billion people anywhere on the planet just as easily as you can someone in Norway. And eventually, a technology like Bitcoin will be able to do that. Not yet. There aren't enough people using it. It's not as easy to use. There isn't the capacity to do it for 7.5 billion people, just like there wasn't the capacity to do image attachments on email. But if you try to imagine where this is going as the flexibility increases, things become easier and easier and easier. There's this very strange thing that happens with new and disruptive technologies, which is that at first, they completely fail to even simulate the technology they're replacing. Think about the introduction of the first car. You've got a horse, you've got a carriage, and someone tries to sell you a car. And they're there demonstrating this vehicle, right? And compared to the horse you have, the car sucks in every way. First of all, horses are the original self-driving vehicle. Full autonomy. In cars, we would call that level 4 autonomy. Right? You know when the guy walks out of the saloon and goes, and the horse comes? We just managed to do that with a Tesla in the last 3 years, where it comes from the parking lot and picks you up. Horses could do that for thousands of years, right? You arrive outside of the bar in the saloon, jump off the horse, and the horse just goes by itself to go refill on water and fuel. It has independent four-leg drive with traction control, autonomous obstacle avoidance, distance keeping, and lane management. Wow. Meanwhile, if you tried to use a car in the roads they had then, it would get stuck. It wouldn't be able to move because the roads were not viable. This happens again and again and again in technology, not just in the past, but also in the near present. 3D printing. 3D printing, most people hear about 3D printing and they read about it, and it got really popular in the last few years with a small company called MakerBot. How many people have heard of MakerBot and 3D printing? Yes. Have you seen it? 3D printing was not invented by MakerBot, of course. You could buy 3D printers at the time when MakerBot was released. They were the size of 4 refrigerators stacked next to each other, right? They used either laser sintering or other forms of metal deposition. They cost about $300,000 to about $1 million, and they produced beautiful, beautiful prototypes that could be used directly, even in engines, out of metal components. And then you got the little MakerBot in the corner that stinks of plastic and is rickety and has very low resolution. And it produces this gnarly little plastic cube, and you go, behold the revolution of 3D printing. It's shit, right? And anyone in the 3D printing business would go, that's ridiculous. Why are you even pretending to try to compete? And the answer is simple. It's because that thing costs $1. And it looks crap now, but give it 30 years, put it on every desktop, and see it change the world, because you're never going to change it with this $1 million piece of equipment that you built that's the size of a bus. We have drones, right? Everybody excited about drones? Who's played with a drone? Fascinating, right? Yeah? So imagine a platform that can be released from your hand, guided to an altitude, provide remote surveillance, perhaps monitor location to tell you if someone's approaching, like a guard duty, return automatically and land back on your hands whenever you want it. Arabs had this technology 6,000 years ago. They called it birds of prey. They taught a hawk how to do that. Take off from the hand, do wide area surveillance, come back. Faster than a drone, higher than a drone, feeds itself, can actually go hunting for you too, right? Doesn't get lost, doesn't crash, doesn't have 20 minutes endurance, has 20 hours endurance on a single meal. So a drone looks terrible compared to a bird of prey. And yet, can you make a swarm of 1,000 that can move at 500 miles an hour? You can never do that with a bird of prey. Give us 10 years with drones and watch what happens. This is what happens with technology again and again and again. The first iteration, what it does is it doesn't improve on the existing capability. Instead, it widens the field. It opens up the door for a much wider set of applications that were never possible before. And in doing so, it fails to excel at the applications you can already do, momentarily, until economies of scale, volume, coordination, and productivity make it much better at everything else and the thing that it originally failed at. And so we see this happen again and again with technology, and now we're going to see it with the technology of money. VIPs is great. As long as you're over 15, have a debit card or bank account denominated in Norway, and you only want to send money to Norwegians. And Bitcoin looks like it can't do any of those things, but all you need to qualify is the ability to download an application on an Android phone that can cost $25 anywhere in the world, and you can then send money to 7.5 billion people with that same application as long as they download it too. At first, it looks inferior, but it opens the door to create a completely unified financial system without borders. But it's not just a payment network, because one of the other things that this technology does is it provides a global store of value, a universal reserve currency, a system of digital gold. We will look back, I think, 10 years from now, if this experiment is successful, and see the emergence of this global standard, this new asset that allows both individuals to preserve wealth and eventually even states to preserve wealth. It sounds preposterous if I say it today, that one day countries will accumulate cryptocurrencies as part of their foreign reserves, as part of their capital reserves. It seems ridiculous. It will happen. It will happen, and they will be able to acquire these cryptocurrencies that will not only represent value, but they will also represent neutrality. They will not belong to any flag. They will not reflect any geopolitics. Every form of reserve currency we have today reflects geopolitics. It reflects national interests. But cryptocurrencies are reflective of math, not geopolitical interests. So you can have this emergence of a global asset class, a stable store of value that provides us with independence. And that's just the beginning. Because there are other blockchains, and they're doing different things. Things that are more in the area of governance. How many here have heard of or used Ethereum? Now, you keep hearing these words, smart contract. And most people have no idea what a smart contract is. It sounds smart. It sounds like a contract, so maybe it's related to some legal language. But really, that term is quite misleading. A smart contract is really a dumb program. It's a very simple, dumb program. What's special isn't the program. What's special isn't the smart contract. What is special is the platform it is running on. A platform that allows you to execute code in a persistent, consistent, worldwide, secure, neutral, censorship-resistant way. Unstoppable code that runs everywhere, that runs the same everywhere, on a platform that can be trusted to combine financial activity and governance in a single program. That's a really exciting opportunity. Now, what are we using this opportunity for? To do initial coin offerings. That's a waste of that fantastic opportunity. And it's going to create some spectacular explosions when these ICOs go boom. But that doesn't change the fact that behind this is the possibility to reinvent governance. And if you understand what Bitcoin is doing, Bitcoin is a direct disruption to the basis of central banking, store of value, payment networks, and international wire transfers. Those are obvious, right? Bitcoin offers solutions that disrupt these four functions: central banking, store of value, payment networks, international wires. It offers a novel way of doing these things in a way that's open, global, neutral, censorship resistant. And that's exciting. What exactly is Ethereum doing? What does that disrupt? For that, you have to look at one of the most important inventions of the 19th century, which was the modern shareholder corporation. But it's not really a 19th century invention. It's actually a 16th century invention. And in the 19th century, we see the modern version of that, which is available across the world. But it goes back to the East India Company, right? The Dutch East India Company and the British East India Company, the first two corporations that under a royal charter allowed individuals to invest in a journey across the seas in order to get spices and bring them to Europe. That institution is the basis of commerce and has been the basis of commerce for 400 years. And it's about to get majorly disrupted. What are the key characteristics of a corporation? One, jurisdiction. Corporations have a domicile. They have a location, right? They have a specific country of registration. Who needs that? Forget jurisdiction. How about we now do that on a completely global basis with companies that are not registered anywhere, but are registered everywhere? Really not registered. They simply exist. The decentralized autonomous organization is the reinvention of a 500-year-old concept of a corporation for the modern age. It allows any number of humans or software agents to collaborate on a long-term or short-term basis to engage in a common venture with a governance structure that allows them to vote, a system that allows them to share in equity, contribute to funding, and receive returns on investment. Most of the early examples we have so far are focused on the funding side, which, in my opinion, is the wrong side of the equation. Funding before governance is a very dangerous example. Most of the initial coin offerings we see coming out of Ethereum have a lot of funding and very little governance. The modern corporation is going to be reinvented as we introduce systems that offer us modern, new, novel mechanisms for governance. And eventually they'll reinvent financing as well, but governance is where it starts. I use a simple analogy to explain this concept. What is the difference between a rocket and a bomb? Rocket science is really the fundamental difference, and it comes down to governance. If you look at a rocket, chemically speaking, it's a bomb. The components of a rocket are exactly the same chemical components you would use to construct a bomb. The only difference is, one is an exothermic violent reaction that happens almost instantaneous and in every direction. And the other one is an exothermic violent reaction that happens gradually over time and in one direction. Sometimes, if you get the governance wrong, the rocket turns into a bomb. And it goes from one direction measured to every direction instantaneous, right? How do you get to learning how to do governance is by building several of these, having most of them blow up before they leave the launch pad, and learning how to do better governance until one day you can really get quite high with these devices. You can achieve rocket science. But if you look at the early days of rocket science, it doesn't seem possible, because these things keep exploding. Ethereum's ICOs are rocket science without governance. And what we're creating is a lot of pretty powerful bombs that are exploding on the launch pad. And more of them are going to blow up. Some of them are going to reach, a few hundred feet in altitude and then blow up spectacularly. And part of the reason is that we're putting a lot of fuel, which is the money, behind very little governance. And the more fuel you put and the less governance you have, the more likely you are to make the transition from rocket to bomb. The worst thing you can do to a startup is take a group of professionals who have never worked together and then hand them $10 or $15 million on the basis of an idea, and watch how quickly friendships fall apart. How quickly the people you thought were your friends give you a call from Bermuda going, I'm really sorry, man, but it was too tempting. I had to take the money and run. This is going to keep happening. But don't let that distract from the very fundamental thing that's happening underneath, we are gradually building reusable, mature governance models. Governance models that will reinvent the modern corporation. And this is no small task. Reinventing the modern corporation will radically transform international commerce. These two examples are just what happened in the first 8 years of this technology called the blockchain. Out of this technology, we have these two examples: a system of money, payments, international currency, and possibly a reserve currency, and a system of governance through smart contracts that will revolutionize the modern corporation. Don't let that distract you, though. There's a lot more blockchain going on, and most of it is bullshit. Now, the very difficult task is being able to tell the difference between these very real, very meaningful, very disruptive, very innovative technologies that we see, and the meaningless, marketing-driven, funding-oriented excuses that people call blockchain in order to raise money. It's often very difficult to tell which is which. You have to start with what are the principles that a blockchain delivers. Now, I prefer to speak of open public blockchain, because open public blockchain is the magic technology. It's like the difference between internet and TCP/IP. TCP/IP is not revolutionary. TCP/IP is not what made the internet magical. In fact, the early internet didn't use TCP/IP, and it was still revolutionary. And today's internet could change to a different protocol and still be revolutionary. What is magical about the internet is that it is open, borderless, neutral, and censorship resistant. It is a global, equalizing communication system. And TCP/IP is just the means by which it gets that done. The open public blockchains today are the internet of money, the internet of corporations that we see now emerging. And blockchain is just a TCP/IP. And you can take TCP/IP and make something very boring. How many of you work in a corporate environment? My condolences. How many of you have an intranet in your company? How many of you love the applications you have on your intranet? TCP/IP, right? You take this technology, and what you do is you remove all of the things that make the internet interesting. The internet is open, an intranet is closed. The internet is borderless, an internet has firewalls. The internet has permissionless applications. Anyone can write one. The intranet is controlled by the IT department and has applications from Oracle and Microsoft. The internet connects you to the world. The intranet isolates you from the world. So you've taken the same technology, changed the culture, and built something that doesn't resemble what you started with. And you end up with something that is insecure, stale, boring, and that sucks productivity instead of increasing it. The very same companies that luxuriate in intranets, banks, large corporations, are now luxuriating in blockchain because they failed to learn the fundamental lesson that what is magical in these technologies is the open, permissionless interconnectivity, the borderless nature, connecting the world, freeing the flow of information. In the case of Bitcoin, freeing the flow of money globally. In the case of Ethereum, freeing the constraints of governance and corporations globally. You take that technology, you close it, control access, control innovation, and build a system that is inside your company. And what you've built is the intranet of money, the intranet of corporations, and it is boring. But it's worse than that. It's not just boring. It's also insecure. It is almost impossible to secure the system because you centralize control over it. And the only reason Bitcoin is secure, the only reason Ethereum is secure, the only reason all of these open public blockchains are secure is because control is completely decentralized. Centralizing control does not make things more secure. It makes them vulnerable. You've also taken away immutability. Immutability is one of the great characteristics of these open public blockchains. Information stored in them cannot be retroactively changed unless you have a closed private blockchain, in which case it is no longer immutable. It can be changed by whoever has the keys, which today is the corporation or consortium. And tomorrow is a gang of 14-year-old hackers called Anonymous. And they take over changing your immutable blockchain, which turned out was very mutable. If you take away the characteristics that make these open public blockchains interesting, what you end up with is stale, insecure, and boring. Be very skeptical. When you hear a company say, we're going to use a blockchain, 90% of the time what they mean is, we're going to use a database. And the reason for that is because the first hurdle that any company or government must overcome before they can really use this technology is to relinquish the illusion of control. That's step one. You want to use blockchain? There are several open public blockchains. Use those. But we don't control them. Exactly. Relinquish the illusion of control. Embrace the security of decentralization. Embrace the innovation of the commons. Embrace the openness of global communication. Those are the revolutionary things. Those are the things that make these technologies interesting. Give up control. And that is very difficult to sell. It's a very difficult idea to even communicate within a large corporation. You will be more secure if you have no control over the system. That is a very difficult concept to convey. It is the truth. And so you have to be brave when you have these conversations. You have to be able to call a spade, as we say. Now, I know this is not part of the culture here. American culture of being very direct is, I am sure, as in most of Europe, considered rude here, right? If your boss comes and says, we're going to use a private blockchain, it is not proper to say, you know what, Bjorn, that's bullshit. Now, you can hire an American consultant to come in and do exactly that little thing. It's probably much more credible if they're well paid. But be brave. Speak your mind. If you see that what your companies are trying to do is simply a database, is a repeating business as usual, but sticking the word blockchain in to make it sound cool and modern, but it's not really a blockchain, it's just a database. Speak up and say, that's not what this technology is designed to do. Ask the important questions. Which of the promises, which of the features, which of the capabilities of the open public blockchain are we trying to leverage with this application? What is it that this application says we need a blockchain? Because not every application needs one. In fact, very few applications need a global trust platform. It's inefficient. It doesn't scale. Democracy doesn't scale. Blockchains that are open and public are inherently egalitarian systems. That does not scale. It's not intended to scale. It's intended to be egalitarian. There's a difference. What are the principles that you're trying to achieve? We want to use blockchain to put healthcare information. Really? Which part of open, neutral, censorship-resistant, borderless, transparent, resilient are you going to use for that? Because at least 5 of those are antithetical to any application where you would put private healthcare information. I hear this a lot. How many of you have heard of healthcare on the blockchain? Oh my God, it's a nightmare. Can you imagine having your healthcare information on a public ledger that can never be changed even if there's a mistake? We already have a system like that in the modern world. It's credit scoring. It's where a single corporation controls your credit rating, and when they make a mistake, they don't have to fix it, and you are punished for life for somebody else's erroneous data. And now we want to do this in healthcare with our DNA. What a brilliant idea. Sign me out. I don't want anything to do with it. Blockchain in transportation. Blockchain for clearing securities. Blockchain for logistics. Blockchain for blah, 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 blah. 90% of those applications, the word blockchain means database. Learn the difference. Teach the difference, and be brave enough to speak up when you see the difference. This technology is revolutionary because it is open, because it is public, because it is global. And if you use it for the right applications, the applications that need to be open, transparent, highly innovative, censorship resistant, neutral, and global, then this technology is really, really powerful. Use it for the right thing. Thank you.
Hello, everyone. Welcome to our panel, Breaking the Blockchain Hype. My name is Laura Shin, and I am the host of a couple of podcasts on crypto and blockchain. One is called Unchained, and the other is called Unconfirmed. I urge you to check them out. We're going to be discussing blockchain and the hype around it, and also when it makes sense to use a blockchain and when it doesn't. In recent years, you've probably heard all the hype around blockchain. People are very excited about it. It's being talked about as a way to solve problems ranging from financial inequality to tracking goods in the supply chain. And yet, here we are. We haven't seen a ton of actual products that are live using blockchain technology. So we're going to be talking about when it is appropriate to use a blockchain in enterprise and how you figure that out. And to discuss this issue, we have a spectacular set of panelists. To my left here is Shweta Shetty, who is the Senior Director at SAP. To her left is Adam Ledwin, CEO of Chain. Then we've got Brian Bellendorf, the Executive Director of the Hyperledger Foundation. And finally, at the end, Sheila Warren, who's the Project Head of Blockchain and Distributed Ledger Technology at the World Economic Forum. So a couple of quick notes. First of all, we're going to be releasing a recording of this on my longer podcast, Unchained. So for that reason, I urge all the panelists to do as I'm doing and speak directly into the mic. And I also would urge you all, when you ask your questions, to make sure to speak into the mic so my podcast listeners can hear your questions. Without further ado, let's start with an overview of the way blockchains can be used. What are your guys' what are you most excited about when it comes to different applications of blockchain?
I think I'll go first because I'll let the smarter people tackle the use cases once I've run through my list. But I think as SAP, the use cases that we see early benefits from the low-hanging fruit, if you may say, for blockchain would be use cases around supply chain, either track and trace, ensuring the provenance of your goods. Trade finance is another area which I think is ripe for disruption using blockchain. And personally, I'm super excited about what governments in the developing world are doing with blockchain. For example, a land registry, where all of a sudden a lot of developing countries can potentially put the ownership of land onto the blockchain and make transactions a lot easier that way.
I'll go next. I mean, I think it's helpful to start by understanding, having a kind of common understanding of what what blockchain technology is, because I'm sure many of us see headlines about ICOs or coins, and for some of us that might characterize this term blockchain, but it's really this underlying technology that is this novel break from what was possible before, which is a technology that's a little bit of a database, it's a little bit of a network, but what it's really for is bringing together a consortium of participants, sometimes a consortium as large as the whole wide internet, sometimes as small as simply 4 or 5 organizations that need a common system. And what it does is establishes a common ground truth without needing somebody at the center to play God. And that's useful in almost any scenario where you have multiple parties who don't necessarily, distrust each other entirely. They trust each other enough to do business with each other, but they need some way of being able to verify the things that they trust, right? Some way to agree, here's a transaction 2 parties did, and that becomes now a part of a long-term record, right? Here's a statement that was made by one party about another, and now everyone remembers that. So it gives us this history of what happened, this kind of immutable ledger. Obviously, it's more immutable the more participants are on it, and Metcalfe's law still applies, which is the value of these networks is still greater the more participants are on it. And so it turns out there's a bunch of use cases that today signify for us low trust environments where we need to have that history of transactions. In supply chain, that's a pretty obvious thing, whether we're tracking food and where that's entered the system to try to make sure that if lettuce goes bad, that we can try to isolate where it went bad and do a recall on just those products rather than all lettuce in the entire food chain, as has happened recently and cost that industry billions of dollars. Whether it's diamonds and where they've come out of the ground to make sure you're not buying diamonds mined by slave labor or used in gun purchases, weapons purchases, that sort of thing, or fish caught by fish quotas. But it turns out there's lots of other transaction types as well. Settlements between financial organizations, those sorts of things, or even just the establishment of common directories. In healthcare, for example, there are applications of this to keeping track of who's credentialed to serve as a surgeon or as any type of like medical profession. And when they move from one state to another, today it often can take weeks for a doctor properly credentialed to earn the right to be able to practice, weeks or months, when really that should be a simple lookup into a common shared directory. So there are live projects now in all of those sectors, meaning either late stage pilot or production. And these are all kind of a world away from the cryptocurrency use cases we all know about, but are starting to provide some value and hinting at potentially applicability to every sector out there.
And I'll briefly add, I think that there's room for engagement with blockchain or blockchain deployment where we're already seeing movement from a sector itself towards decentralization or digitization. So there are power grids, for example. We're seeing movement towards decentralized power grids in places where either there is no grid or even places where there is a grid, the microgrid is becoming something of great interest as more and more consumers have in their homes solar panels, et cetera. So there are new economic models being created in that industry already, and blockchain can support those models in some cases. Similarly, digitization, where you have a big paper trail. So in shipping, logistics, for example, where there's already a movement for digitization in certain parts of the supply chain, blockchain can help accelerate and amplify that too.
So I don't know, I mean, we can keep talking about some of the different use cases that we're excited about, but I'd actually like to shift it to different applications that you guys are actually working on, and I actually think, Adam, you might be the perfect person to take that baton. Sure.
I'll start by briefly answering the prior question around use cases of blockchain technology. Our point of view is that a blockchain is primarily a mechanism for creating digital bearer instruments our work at Chain has primarily been focused around the new asset classes emerging around crypto assets, as well as tokenizing existing assets like securities and currencies so that they can also be in this internet native digital medium of a token. And we haven't seen much traction outside of that scope of financial assets. We haven't seen much traction in industry around data, supply chain, identity, beyond kind of initial explorations yet. So far, we skew a little more closely to kind of the origins of the technology, which relate to new financial instruments, new financial mediums, pioneered, of course, by Bitcoin. So where Chain has been working is with customers in the financial industry like Visa and NASDAQ, and looking at projects where they want to stand up new networks or new services, but instead of using traditional market structure where you have an organization in the center with a database that's tracking balances and tracking histories for everyone participating with that service, instead to have more of an open architecture where different partners can participate and view, access, read, and write to that ledger, and thereby sort of distributing more of the trust to the edges of to the participants than you would see with a more traditional architecture. So to be even more explicit about it, payments, securities issuance and transfer, new types of mobile banking, that's where we found the most kind of fit between the technology, which is really a database for value in our minds, and industry.
And who else wants to jump in with how their company is using blockchain now?
I can talk about something that we are doing, and it's in the pharmaceutical space. Now, serialization is something that is mandated by the FDA. That is, pretty much every SKU needs to have a unique number. And this should help drug companies theoretically, recall drugs at the right point in time, and ensure that you can verify the authenticity of any medicine that anywhere in the value chain. Now, that's great in theory, but if you actually think of in practice, the number of hands that medicines change over the entire value chain is a lot. And to have all of these people enter their data into a central system is challenging. And it's challenging because all of them use different databases in the back end. Some of them don't even use databases, right, depending on which part of the world you are dispensing drugs in. So what we have done is we tackled a very small use case, which is ability to sell drugs that have been returned. Now, if you look at the economics of it, 1% to 2% of the drugs that are returned can be resold. They are all, within the right length of time from the expiration date, etc. But you cannot sell it at, it's more challenging to sell them at this point in time because you cannot prove the authenticity of this drug actually being what you manufactured. So we said, let's tackle this use case. We did a pilot with Merck and AmerisourceBergen. The pilot went well. And at this point in time, we have 15 other pharmaceutical companies that are doing a more advanced proof of concept or pilot around this. But it's still at the pilot stage. I will not say it's production, and to take it from pilot to production is going to be not a technological question, in my opinion. It's going to be more of a governance, are these competitors ready to work with each other sort of a question.
Yeah, so let's talk about kind of the questions that you ask yourself when you're deciding what use cases to tackle. Here we've laid out kind of a whole bunch of different ones, and I'm sure, even in my intro, I also named some additional ones, but Adam mentioned that, payments, securities issuance, those are kinds of ones that they realized might work for them. And Shweta is talking about pharmaceuticals and combating counterfeiting in that area. So amongst all the other things that everybody is claiming blockchain will solve, how did you come up with those as the areas that you wanted to tackle? And Brian and Sheila, I'm sure, also have. Sheila, I definitely know. She's got this whole little flow chart that she created that was pretty awesome. But why don't we just discuss this? Because I think this is where a lot of people get stuck.
Sure, and I can go a little bit more into that. So we did develop a toolkit. We call it Blockchain Beyond the Hype, and it came out at the end of April. And it's designed to give a quick initial assessment of whether or not blockchain is appropriate to the problem at hand. Blockchain is a technology, and it is not a solution to everything. And we think it's very important to recognize that it is more applicable to certain kinds of problem spaces than to others. So to answer your question more directly, we tend to focus on the removal of an intermediary or a broker. So is that something that you're trying to accomplish? Is there a reason that you want to decentralize or disintermediate what you're doing? We also look at things like, is there a benefit to having an immutable record, a transaction record? Or was that actually something you don't want? I think it's interesting to just briefly note with the challenges of GDPR and the right to be forgotten that GDPR is intended to provide to citizens of the EU, what does that mean for the creation of an immutable record in terms of data? These are interesting kinds of policy and regulation questions that come into play, and you have to be very mindful of your regulatory environment when you think about the creation of an immutable record and what that means. Who should have access to that record? Is it important that multiple parties have a single source of truth? It may be that that's not the case. And in many cases, we find that when you really push on a particular potential use case, you wind up realizing that the permanence, it's really immutability, but the permanence is not desirable for some reason or another, or that you really wind up with a benefit to having centralization, that there is such an obvious authority figure on the transaction record that you're trying to create, as an example, that it might be worthwhile to explore other options that already exist rather than moving immediately or directly to blockchain. That being said, we're certainly quite optimistic about the use of blockchain, particularly as the technology evolves. It's still quite an early stage technology. But as it evolves, these are all known problems. And there are, I will say, brilliant minds, and many of them, working on the protocol layer to solve some of these problems, to increase speed, to increase throughput. All these kinds of things are things that are being focused on by the technologists in this space.
But I think it's important to add, there's no use case for blockchain technology for which somebody couldn't come back and say, well, couldn't you just do that as a centralized system? Wouldn't it? And I don't think anybody credibly could argue that it wouldn't be faster, it wouldn't be cheaper, it wouldn't be more flexible even, because we know how to build big centralized systems. We know how to build an AWS or a Twitter or a Google search engine.
And
it's
we
a
have
lot
them.
harder to
and we
build.
have
We
them,
have them
right?
already,
Yeah.
right? It's a technology that solves not a technical problem, but a political problem, which is there's a reason why there's not a Bitcoin.com keeping everybody's balances straight, because then the question of who runs that site, how corruptible would it be, et cetera, becomes a big challenge. And it might be okay to do that in a social networking site, right? It's definitely not okay when we're talking about international balances or areas where parties don't have that all degree of trust in one central entity. It's very similar to, as the internet launched, we didn't have secure email, we didn't have secure web transactions, because we thought, well, the people carrying our packets for us, they're not going to sniff and look at what's inside those packets, right? Well, it turned out they do. So now we need encryption between endpoints, and it's one reason why markets now realize they need to avoid centralizing their systems on and the trust that they have in one entity.
And can we talk a bit about elections? Because this is something Brian and I actually talk about a lot. We both are a little skeptical of the election use case, but I think, and I'm speaking for you at this moment, but we both acknowledge that there are certain aspects of elections to which blockchain is quite suited and others where it probably isn't suited. So I'm just going to tee you up because I know you want to talk about this.
So, and I don't want to steal too much direction or thunder, there is a lot of perhaps irrational exuberance around the idea of, well, if elections could just be digital, if we could vote by phone, maybe we wouldn't have what we had here in California 2 days ago, which is only 20% of the population actually bothering to participate in a fairly major election, right? It's well intended, and it's driven by this idea we're always on our phones. Shouldn't we just be able to vote from that? But for lots of good reasons, we know that there are challenges to actually getting digital voting to work. And blockchain is not magic pixie dust that suddenly makes that a trustworthy process. But the two parts of the election system that would benefit from having a distributed ledger involved, a mostly public distributed ledger, would be in voter registration, making sure everyone's registered to vote and where they are and the status of that registration, if it's been withdrawn or whatever. And that's the same database that you could see at home as you would see when you show up to the polling place. And then at the tail end of the election, when you're adding up the results from each polling place, being able to do that quickly but also verifiably. Both those steps, I think, would help ensure the integrity and auditability of elections to a degree we even don't have today, and would give us it allow us to actually get to answers more quickly as to who won the mayoral race in San Francisco, those sorts of things. But it would help, I think, ensure that public confidence in the voting system, which today people proxy through their governments. Here in California we trust the state to run a competent election. In Oregon they trust them so much they do all mail-in ballots, which is remarkable, right? But you can't take that degree of trust in central institutions for granted in many other countries of the world, and hopefully that never happens here.
Yeah, I actually have had this topic come up a couple of times in some of my recent podcasts, and you see this kind of polarized view of blockchain for election purposes in the two podcasts I'll mention to you. So the first one was, and these are both on my shorter podcast called Unconfirmed, but one of them was with Tamika Tilleman of the Blockchain Trust Accelerator and the New America Foundation. And he worked with a group of different organizations to do a pilot of blockchain-based voting in, I guess it was, I think normally it was something like military personnel in West Virginia that don't typically have access to voting at all because of the way they're deployed or something like that. I don't remember the circumstances, but it was something where this was a population that when they're deployed in this particular way, then they cannot vote at all. And he talked about, the promise of what they saw with using this pilot and how they also I think had like a paper component as well. And on Twitter, just in the last couple of days, I saw that somebody had caught wind of this and had just written blockchain-based voting, no, just no. Like, don't do dangerous things with this technology, something like that. And Vitalik Buterin of Ethereum even weighed in. And so what's interesting is, you have kind of that one side that feels like this can be used for that, and then you have this other side that is concerned about it. And someone who expounded on that concern in my podcast Unconfirmed was Alex Gladstein of the Human Rights Foundation. I happened to be at the Oslo Freedom Forum last week, and he has been thinking a lot of really interesting thoughts around how blockchain technology can be used both for good and for evil when it comes to human rights. And so he talked about how if you develop a blockchain-based election system, but it's like, in a place like Russia or something where there's a dictator, then, this idea that blockchain kind of creates an element of trust for you just goes out the window, because then it's obviously very easily manipulated.
And I like the distinction in those two cases, because I actually am a fan of the West Virginia military case. I think what you're doing there is providing access to a group of voters who are legitimate voters. It's very easy to ascertain that they are legitimate voters who don't otherwise have access to the voting system. So you're basically enhancing democracy in that sense, which I think is a legitimate claim to be made. But I think that as a general proposition, you have to be very careful. We're at a time with this technology when any successful use case runs the risk of being scaled to situations where it's not appropriate. And what blockchain cannot solve, or any technology really, is the coercion problem. So you may be able to prove that I, using my biometrics, voted, it was me, and I did vote for a certain candidate. That's all verifiable and true, right? You could do that. But what you don't see is the context around me, in which there is the risk of the soldiers running through my village, or all these kinds of coercive elements that happen, not just in dictatorships, but actually happen to ordinary people, and happen even in the United States. Voter coercion is a real thing, it's documented. So if you can't get around that, how do you trust what you're actually seeing? And I think that these are the policy kinds of questions we're focusing on at the center. How do you ensure that blockchain is not just cementing a pre-existing problem, providing accountability, or providing this sort of new form of trust where you really shouldn't have trust? And so that's something that we think about a lot in our work.
And so just to bring this back to enterprise, let's kind of shift a little bit more back in that direction. Adam, did you want to answer this question around how you determine whether or not to apply a blockchain or a regular database?
Yeah. So I think it's really important to, if you're sitting in a company thinking about this technology, to be just incredibly honest with the analysis and start by asking, are we really saying we just want modern software and we want to do more of a traditional like transformation project. And whether it's voting or supply chain or any of the cases that we've discussed so far, or things in healthcare, feels like oftentimes what the leadership of a company is actually asking for is for the thing to just work well and to function like a modern piece of technology with like a good mobile experience and a good online experience. And I think sometimes that gets conflated with blockchain unnecessarily. And I think in most of the cases that we've seen, a traditional solution is called for because, as Brian pointed out, there isn't a market politics trust problem. There's we need a better modern solution problem. So I think most of the time you should be ruling blockchain out. And it's a very unique tool when there's a market failure and you need a different trust model between participants. And even then, it's still very early days for the technology. It's still very much a grand experiment and a sort of an experiment in a new type of infrastructure and a new type of architecture. And it's good to just keep that in mind so that you don't sit in the audience and have FOMO that if you're a CIO, you're not like doing enough in blockchain. So I'd say that would be my frame for folks.
And I don't know if this gets into kind of too proprietary or private information, but I'm sure you must have so many companies that come to you saying, hey, Chain, can you create some solution for us? So how do you choose like which customers you're going to work with, or rather really on the flip side, how do you decide which ones you're not going to?
Yeah, there's a very easy test. If in the first meeting the customer says, we want to do something with blockchain, then I don't work with them.
Okay, so let's go to a more gray area. What are some ones that you kind of really struggled with a little bit, where you thought, oh, this might work, and then ultimately decided that's just on the other side of the line?
Just to be clear about why I said that, I think that the kinds of customers, the types of projects we want to take on are ones in which it's an unachievable outcome without a blockchain, versus somebody thinks this technology is hot and they want to like make sure their company is like
Long Island blockchain or something.
Yeah,
Long
right. Or it's
blockchain tea.
Yeah, it's like the other thing that we see a lot. I hope this doesn't cut too close to home here, but is there are a lot of what I call Silicon Valley safaris that happen, where the management team from another country or another part of the U.S. comes out to Silicon Valley in a very nice air-conditioned luxury bus, and they create a schedule, and they go to all of the companies that are like being written about in The Economist over the last 3 months, basically. The blockchain companies, the AI companies, whatever. And they show up, and then they say, like, we want to do something with blockchain. So we take a lot of those because part of being on the vanguard of new technology is educating the industry about what it is and why it's interesting, and so we like to do those meetings. But they don't tend to become customers because their frame of mind is not, oh, we have a specific thing we're trying to solve. It's more interest in learning about, is there something here? So that's why I said if the opening statement is we want to do something with blockchain, it's usually downhill from there.
By the way, if any of you are going to do one of these bus tours, let me join as a reporter, and I'll make something fun out of it, I promise.
Yeah, and feel free to come to Chain. So what we found to be most effective is, because we're closest to the technology, we have a set of hypotheses about where it's going to apply, and then we're much more outbound. So our relationships with NASDAQ, with Visa, with Citi, we're all outbound, where we went to them and said, we think there's a massive opportunity around international payments because of the trust model required in correspondent banking, and you're best positioned as Visa to do something about it. Let's have a conversation. And that has led to the most productive outcome. So I would say be open-minded about hearing from startups that approach you, because oftentimes they're closest to the state of the art and they might have something of value to propose. So that's been the most productive path for us.
I find that interesting because those companies have, pretty entrenched processes. So, like, what was your pitch and how did you convince them to, especially at the time that you did it, it was 2015, which definitely was a different era from 2018 where we are now, where everybody is experimenting in this. 2015 definitely was, kind of the Bitcoin is criminal money days, and it was long before even this blockchain, not Bitcoin mantra became part of the blockchain hype that we're discussing. So how did you make that pitch and convince them?
It wasn't easy. It actually tended to start with me educating, or our team educating, a set of executives about Bitcoin. In fact, the curiosity around Bitcoin was very real in 2015, 2014 even, and still today. So that tended to be the way the doors were opened. And then it became a conversation about, now that you understand the model that is Bitcoin, let's think about sort of a similar architecture, but instead of around a new currency, around existing currencies, or around existing assets. And that tended to be the way the conversations became meaningful and interesting. And since you brought up blockchain, not Bitcoin, that was also the kind of dominant narrative at Davos this year, right? Was as someone that works in the space, like, usually that was the nature of the dialogue with folks that I met at the event. And I encouraged people there, and I'll encourage people here, to not be trapped by that dichotomy, to not get into the one is better than the other, blockchain is better than Bitcoin, Bitcoin is better than blockchain. They're two incredibly different arenas still. When I think blockchain, quote unquote, I think primarily about a context where you have existing financial assets and you're trying to put them into a new type of market infrastructure. And that's not really competitive with Bitcoin or other crypto assets. Those other crypto assets are creating an alternative system, an alternative set of software services that have a totally different arc and possible future to them. And I think it actually behooves folks not to view them as one threatens the other, but to understand them on their own terms, because there are going to be contexts where the enterprise, especially financial institutions, will want to participate in the crypto asset world. And you see this increasingly at NASDAQ, at ICE, which is also New York Stock Exchange, at Fidelity and other asset managers, where their clients are now showing up and saying, we want exposure to this new asset class. Can you help us? Because we don't want to use a startup to manage or trade. And so now the issue is sort of being forced. And for the folks that were not dismissive of cryptocurrencies, but were investigating them alongside other blockchain solutions, they've been best positioned to build those next generation of services to sort of ride the wave around that asset class. So I wouldn't again, rule out Bitcoin or rule out crypto assets if you're in more of a traditional enterprise role, because I think they're here to stay.
Yeah, let's actually also shift a little bit toward more questions that are a little bit more detailed around when you use a blockchain. And I was just wondering if there's a difference about when you use a blockchain in a B2B context versus B2C, or if there's a different way to think about it, or if it's the same.
Yeah, I think predominantly the value that's going to be realized in the next 5 years will be in a B2B setting rather than B2C. I mean, with cryptocurrencies aside, because I think that is very much a consumer-driven kind of thing, even with the institutional interest in it now, it's predominantly about serving their clients, so I consider it more C rather than B. A lot of the stories will be about, here's a set of banks that now have a settlement network between them. Here's a set of participants in a supply chain that now have a provenance tracking system between them. And in many cases, ROI will be very elusive, right? It won't be easy to measure cost savings, right? You'll have flashes of this if Maersk is able to say, hey, we've cut the cost of the paperwork and delay in getting a container from Shanghai to Los Angeles by 30%. That's great. There'll be little bits of that, but it'll be hard to systematically, I think, say, that the GDP generated by or cost savings by net this usage is a number of billions, in the same way that it was hard to make that case for the web, for the internet, when so much of that impact was implicit or kind of ephemeral in a way. But I think a lot of it will be there. Where I think the next wave will hit the B2C space, though, thanks to blockchain technology, will be around identity. I think with distributed ledgers, with some of these underlying tools, we now have the ability to get closer to there's a second whole big world called self-sovereign identity that builds upon blockchain technology in some meaningful ways. And this is a way to get out of the trap of log in with Facebook, log in with Twitter, and get closer to something that acts a little bit more like the IDs in your wallet, like the diploma you have on your wall, like the medical records that, in theory, you should be able to take around from institution to institution. And blockchain technology, there's a bunch of projects out there that are focused on using that to invert the relationship between consumer and identity provider and put much more power and agency, kind of very much following along the GDPR kind of view of how the world should work. And that gets a lot of us really excited in this space.
Yeah, and I think in enterprise, you're definitely going to, I agree with that completely. You're going to see primarily B2B for at least the short to medium term. But I do think there are some interesting government use cases that really are B2C in the sense of government working with citizens. So everything around travel and passports and identity is one of the things in digital identity space, but also government records, land titling, some of the things Shweta mentioned earlier, I think are interesting use cases as well that we're starting to see more engagement with on the part of governments.
And I actually also wanted to ask about, when you put data into a blockchain, it's immutable, as they like to say. And I just wondered, how do you ensure the integrity of that data?
You mean entering data into the blockchain, integrity at that point in time?
Like I just want to frame this actually a little bit more, which is that obviously as a journalist, I get pitched a ton of startups and projects. And one time somebody pitched me their new startup, which was going to be some kind of like time stamping, sort of like a notary. And I think I don't know if they used the word notary, but it was something like, we're going to put this data in the blockchain. And I said, oh, how do you prevent false data from entering the blockchain? The guy literally did not have an answer for me. And I was just amazed that they hadn't thought of this. It was my first question for him. And it was something, and I said, well, you could put like a spam email in there. And he was like, well, yes, then we would prove that the existence of that spam email existed at that moment in time. And I was like, okay, this is not useful to, well, I didn't think it was. So, so how do you ensure the integrity of the data?
I mean, I think you've hit the nail on the head. This is like one of the perennial problems, So I often joke that we talk about garbage in, garbage out problems in technology, and this is really garbage in forever, kind of problem. So if you haven't, sanitized and done data hygiene on your database, it's a big issue. We're looking at a policy project on anti-corruption work. And one of the challenges and tensions in blockchain is how do you preserve some measure of, it's pseudonymous systems, how do you preserve some measure of privacy and security to an individual, for example, who's logging a complaint of some kind, right, against a system, whether that's logging a harassment complaint against a manager or whatever at a company, or whether it's logging a corruption complaint against a public official, for example. How do you balance that with this troll bot spam problem, where if you do enable someone to anonymously, and we see this on the internet all the time, you enable people to anonymously comment on something, what they say, there's a lot of latitude in how accurate that really is, and the ability for others to glom onto that, even in an automated fashion, and kind of just fill your database with junk data. So I don't have a great answer to it. I think it is a perennial problem, and I think it's one of the reasons that we remain cautious about the use of blockchains. If you aren't confident that you have an authoritative source of truth, that the record you're creating is an accurate record, not to mention a meaningful record, right, which I think is also important, something we gloss over, in my opinion, too much. If you can't do that, then this is perhaps, it can even be a dangerous technology, frankly, if that's not a solved problem.
But I do believe, just to add to that, I do believe that with blockchain, it's a little easier for you to ensure data integrity. For example, if my identity is on the blockchain and I'm not sharing every piece of information with every single person around, it's a little less easy for someone to steal my identity. And if you link data that's entered to a valid user, at that point in time, you can be more, the probability of data being entered by the right individual is higher, then it would be, since you cannot steal identity that easily. On top of that, what we do a lot of times in the supply chain use cases is you use IoT, right, at any point in time to link the actual physical with the digital. So that's another way we are trying to make sure that data in the blockchain is more accurate. Of course, you can go and tamper each single piece of IoT device, but that would be challenging given, you can set other things around it.
An example of that would be, so a boat shows up at port with a load of tuna that it claims that it caught in this one region at this one time that would put it within the quotas for a certain country, right? And yet you have data from sensors, tamper-proof sensors on the boat, even on the nets. There are companies that sell tamper-proof GPS sensing and video sensing sensors for nets, as well as satellite data from sensors on buoys out in the water. All of that data could be writing to the ledger, signed by the entities that built these sensors, right, and used to either enhance the integrity of the claim that this boat is making, that it caught this fish at this place at this time, or to refute it, right? And this is data that could feed auditing processes, could feed other types of checks and balances, perhaps even feed a whistleblowing or investigative journalist kind of framework that would give us a greater sense of integrity to claims that are being made about these types of things.
So in a minute, we're going to turn to questions. So if you have a question, feel free to get it ready. But we're going to ask one last question before we get to your questions, which is I wanted to go back to digital identity and what we talked about, putting them on a blockchain and giving power back to people over their data. But how do you make it secure? And then also, how does this square with with businesses' need to comply with regulations?
So I'll chime in. I don't really understand what is meant by identity on a blockchain, candidly. I'll talk about what identity means in the context of Bitcoin as a simple example. So if you don't use a third-party service like a wallet provider or an exchange and you want to interact directly with the Bitcoin network, it operates a lot like a safe deposit box system in a bank, where there's a box with a number on it, and you have a key that corresponds to that box. And to say you own Bitcoin or have Bitcoin is very similar to saying you own or have whatever is in the box in your safe deposit box. So the thing you actually control is that key. So on your laptop would be a private digital cryptographic key that allows you and gives you the sole right to access a digital address or box on the network and move those funds to someone else. And so the question of identity is like, is your identity that number on the box? Kind of, but only if you explicitly make that link and publish that link somewhere and say, my name is Adam and my address on the Bitcoin network is XYZ. But even then, who's to say that that's true? You would need to have some third party validate or verify that you made that claim and then you in fact did move some Bitcoin out of that address and they saw that happen. And so in a way there's a piece of the identity or there's an authentication mechanism inherent in how a blockchain operates. But when we think about identity in the general sense of like your driver's license, your passport, your real human state and its relation to some service, it's not quite there. And I don't think it's a great idea to put like your name, social security number, driver's license number, address, phone, mother's maiden name into a blockchain record, because most of the time that data is transparent, shared, distributed, and immutable. So it's not a great fit in my mind for like identity data per se. And as a slight tangent, GDPR is also interesting with respect to these issues because the requirement to be able to remove data, delete, move, transfer, etc., doesn't really square with how a blockchain functionally operates. So you actually can't comply with GDPR on traditional public blockchain networks.
Yeah, I read a great opinion piece saying that basically the legislation was created before blockchains existed, and it was predicated on this model that a lot of people are saying is probably going to get outdated a little bit.
So privacy, identity, GDPR, all this, it's not at all clear how it all makes sense at the end of the day, how it shakes out. And I'm sure there are like technical solutions where like, oh, our blockchain technology allows you to remove records or change things, et cetera. But then you start to get into like, well, then why are you using a blockchain? And so it's all, I guess what I would say with respect to identity is it seems all very early days and it's not really clear yet if it's a good solution to solving this perennial problem of how we pair our real identities in a digital context.
Okay, one last comment from Brian and then we'll take questions.
And we should get together for lunch sometime because I'll walk you through it, and happy to do that for anyone else as well, because it is much longer than a quick comment can suffice. But the system of self-sovereign identity says, and the use of that with blockchain say, don't use the ledger to store any PII, right? You may use it to store encrypted, you probably don't even use it to store encrypted personal information, by the way. You might use it to store metadata, and you probably use it to store public keys, right? And probably as well signatures on relevant documents. And finally, use it as a way to record who have I granted consent to be able to access information about me. And this is why you want to use a ledger for this, the ability to withdraw that consent in the future, right? So as an auditing tool, as a tracking tool to keep track of where that data might lie, off-chain, right, and ways to manage that permissioning, that's where there's some unique properties to it, and happy to walk through that.
Actually, since we have plenty of time, just one more thing to build on that, if you don't mind.
Go ahead.
Okay. I don't see any burning questions yet, so. When we've done identity projects, and specifically around voting, where we tend to end up is creating an account for someone that is verified in a more traditional way. It could be in person, it could be through another auth system, and then essentially loading tokens into that account that are almost like tickets. So before a vote would happen, you would put a bunch of tickets into that user account that are like Laura Shin tickets, right? So we know who you are, and we've generated these tickets, and they're now in your account. We've issued them into your account. And then when you go vote, what you're actually doing is just like moving a Laura Shin ticket into an account for a candidate. And so that's the way to think about kind of identity as it relates to sort of a blockchain or a token model. And we at our office at Chain, next time you come by, you should check it out. We have this heirloom from the World's Fair in San Francisco 100 odd years ago that is exactly that, the paper version. So it's a booklet where they took your photo and they imprinted it into this booklet, and they put all your identity into like the first page. And then behind the first page, when you flip it open, are like 100 tickets. And so every day, they assumed you would want to come to the World Fair like 100 times because it's the only thing to do back then. So you would show up and you would show them the booklet with your face attached to this book, and then they would open it and tear off a ticket, and then you'd go in. So, in a lot of ways, these old bearer instruments are the best analogs to think about how a digital bearer instrument would function. And so anyway, that's how we think about identity.
I love that. I think that's such a great analogy and such an interesting story. So let's turn to questions. We've got a couple of mics floating around. Just raise your hand. I guess we've got one there.
Hi there. This might be a not Bitcoin blockchain question, but I was just wondering about power consumption. If there's, a lot of people have made a lot about comparing the amount of energy Bitcoin is using to Denmark. I was just looking it up. It looks closer to Pakistan now. I was wondering if that's a problem inherent to Bitcoin, or if that's something that we're going to have to worry about as blockchain is used more and more.
So I can take that one. So I think it's more for, let's say, a public blockchain where pretty much anybody can be on the blockchain, and in order for one party to not manipulate, be able to game the system, each person needs to do a very complex computational problem, and only then do they get the right to then order things on the blockchain. And I don't think private networks suffer from this particular inefficiency. There is the question of data, the same data being replicated across multiple different nodes. That is an inefficiency that a lot of private networks have, but not the one that you're talking about in terms of power consumption.
To add to that, proof of work was a scientifically and algorithmically really fascinating kind of innovation. It's something that predated Bitcoin by a little bit. It's something that's been floating around in cryptography circles for a while as a way, initially proposed as a way to fight email spam. But I think we're going to recognize that this is a temporary blip. Many of the public cryptocurrency communities are already looking past it to things that are much more energy efficient, like proof of stake or other types of delegated authority, mainly to try to ensure that there's a way to have this system publicly operate without attempts at DDoS or spam. And so I've started to use the metaphor. It'll be kind of like mercury mining of gold in the middle of the 19th century, where, if you were a scientist, the idea of using, elemental gold mercury quicksilver, right, to separate out elemental gold from gold ore was nothing short of alchemy. And yet now we're still paying the price in Superfund sites in the Sierras for the use of that to extract gold from those mountains. And it was a terrible legacy that was left behind. I am highly confident most of the cryptocurrency communities will move away from it, and I think those who don't will probably see assets and interest in those currencies move away from those currencies.
Okay, great. We've got another question up front.
About the uses of blockchain, you've talked about different things. Election is a very interesting one. Have people thought about moving the passports and taking the stuff in terms of fake passports, duplicate passports, moving the visa regime on completely on blockchain? Yes, people here in US probably don't have that problem, but people coming from some other emerging third world countries who have to give their passports for a week, 10 days, 15 days to get visa, make their travel pieces around it. But passport as an identity proof on blockchain, which the governments across the world, I know it's a pretty difficult thing, but is that something, any talk around that, or is that something people have thought about?
Yeah, I can take that one. So I will start by saying I'm not convinced there is a problem or use space that someone has not talked about. So the answer is always yes. If the question is, has anyone talked about or engaged in this? Yes, they absolutely have and are at the moment. But in this particular one, I think it's a really interesting use case. There is a project out of our